Good afternoon and welcome to Seattle Real Estate Podcast. I'm your host, Dan Edwards, managing broker of the Seattle and Eastside Real Estate team. And the news has broken. There's all kinds of crazy mayhem going. Interest rates are falling through the roof. No, we're going to talk about what really happened today and what that means. We've got a great show for you today. First off, we're going to talk about mistakes that sellers make in any market. Then we're going to bring in our good friend, Tucker Maxwell with Guild Mortgage to find out what this all means, this big Fed announcement. We've been waiting for it to happen. It's happening. We're talking about it happening. And we're going to demystify it and hopefully get some insight on what to do as a home buyer, what to know as a home seller, and how it's going to affect. So let's jump in to our Real Talk segment coming right up. So there may be many folks out there who have been living in a home for many, many years, but they've never sold a home. And I like to call them first-time home sellers. It's different. When you're going as a first-time home seller, oftentimes you've maybe spent decades in a house and things have changed in the real estate industry in decades. But here are three things that have not changed no matter who you are. If you're thinking about selling, of mistakes you want to avoid. So the first mistake is overpricing the home. Now listen, I love my home. I raised my family 20 years in that home, and I had an idea of what that home's value was worth. And even me, a seasoned broker, oftentimes found myself looking at the things that I loved about the home, and I realized that they weren't things that everybody loved about that home. So when you go to get yourself prepared as a first-time home seller, I think it's super important that you take some time to sit down with a licensed real estate broker that knows your neighborhood, that can walk you through their process of pricing a home. You see, here's two things that are not important when pricing a home. Number one, how much you paid for it. And number two, how much you need to sell it for. Those things are not relevant. What are relevant when pricing a home? Number one, I hope you can, I don't know if you can hear that the guy decides to blow the leaves right next to me. So hopefully this noise cancels really well. Otherwise, you're going to hear what you hear. And I apologize. I had no idea they were doing this. But it's distracting for me. Can you tell? Okay, whatever. I'm a professional. I can power through this. Pricing a home is all about how your home with features and benefit stack up, not to the home that's sold next door, not to the home that's sold by your friend's cousin's brother's realtor, but by that is currently active on the market competing for your sale. So any home that is similar price band. So let's say you're in the $900,000 range. So what can you get for 9 to 9.5, right? What can you get for $1.2 million to $1.3 million? So you look at those price bands and you stack up. You should be a compelling price, meaning if I'm going to compete against somebody, I'm getting more features and benefits for this house than for one of comparable price. The buyers are always going to go there first. I weathered the storm. I hope it wasn't too distracting. I think he's done in this vicinity. I hope he is. All right. Number two, poor presentation. Listen, it's not your home anymore. I know that sounds crazy, but when you decide to go to the market, you need to know it's not your home anymore. It's a public place. And quite honestly, it's not going to look and feel the way you want it to look and feel. What you have to do is we as professionals need to help you, the seller, put that home in a neutral light, depersonalize, declutter, stage if necessary, increase the lighting for the photography, all of that good stuff. But the presentation is, as they say, you only get one chance to make a first impression. And when you hit the market, if there are some things that distract from the competition, well, they're going to go to the competition first. So poor presentation is mistake number two. And then number three is inadequate marketing. There's a lot of different things you can do to market a house. And I would say My competition, sometimes they put a sign in the yard, they post it on the MLS, and then they pray that it sells. You need to find a real estate agent that has a comprehensive plan to cast a wide net, who has professional relationships in the community, who can expose your property to the most amount of eyeballs in the shortest amount of time. So make sure you're vetting those real estate agents that are there to help you get the most out of your home. So those first-time home sellers, you definitely want to remember, don't make the mistake of overpricing the home. I can talk for days about that. Make sure your presentation, how it stacks up to the competition, matters. And then lastly, make sure that your professional has the marketing toolkit to get you the widest exposure in the shortest amount of time, and that will provide you with the best possible offers coming together all at once. That is my Real Talk segment. Thanks for watching. Now, we're going to have a brief commercial break, and then we're going to come back and talk about this crazy thing, this interest rate adjustment from the Fed. Who's the Fed? Are the Feds coming for me? I don't know, but here, if you're stressed out, this commercial's for you.
Are you worried about your health holding up as you age? Buying a new home often involves paying your mortgage for 15 to 30 years, and you'll need to be at your best to keep working strong as you age. Cummins Chiropractic and Wellness has helped families just like yours regain optimum health as they work hard to provide for their family. The team at Cummins Chiropractic and Wellness treats patients with both crisis care and lifestyle care with our state-of-the-art individualized services. We have seen thousands of people reach and maintain their best health as they age. To learn more about how chiropractic can help you achieve your best health, you can call Cummins Chiropractic and Wellness at 425-590-9158 or reach us online at cumminschiropractic.com.
Welcome back to the show. I'm your host, Dan Edwards, managing broker of the Seattle and Eastside real estate team. I'm joined by our good friend, Tucker Maxwell. Tucker, how did I do with that blower in the background?
Hey, you did fantastic. It wasn't too big of a distraction, and we could barely hear it.
Okay, I love noise canceling microphones, but goodness, that, all day, I've been here all day, and the second we go live is when that happens. And I love that our technology eliminates that, but it made me look silly. So anyways, no big deal. Tucker, hey, how many people have called you today about the Feds dropping the interest rates?
Oh, my phone's been ringing off the hook. It's probably the first day this week that I've had to actually plug in my phone multiple times and keep it charged. But yeah, there's just a lot of misconception around who the Fed is and what, in fact, they did cut. So I'm excited to talk to you about it.
All right, so let's talk about it. Obviously, it's big news and it's a good thing, but what really happened?
Yep. So to start with, who is the Fed? The Federal Open Market Committee are the folks that met today, and then the Fed chairman, Jerome Powell, did a press conference. And basically, this is a collection of folks that work for the Federal Reserves around the country. So there's Federal Reserves in New York, San Francisco, Denver, and they control the monetary policy for the country. And the one specific thing that they really control and what they meet on a few times a year is to control the federal funds rate, which is the rate at which banks borrow from one another to shore up their liquidity requirements. So to be an FDIC insured bank, they are required to have so much cash on hand each night. So that way they can handle deposits. If somebody comes in and Dan Edwards says, hey, I want all my money, they have to have enough money to give Dan all of his money. And so they have to borrow from one another. And so to prevent one bank from monopolizing the liquidity, they control what the rate is that they can charge other banks to pull some of that liquidity in. So that's what they did, in fact, cut today by 0.5%, is that federal funds rate that these banks borrow at. So that is great news. The one thing to keep in mind with relationship to mortgage rates is that we priced this in before they actually cut the rates. So 6-8 weeks ago, the folks that price loans at lenders such as Guild Mortgage, they put their heads together and they say, hey, this is coming. Let's start pricing these in now. So 6 weeks ago or so, and Dan, we've had a few podcasts about the great news, interest rates are falling. And that was the anticipation of today's meeting. And what they did today was they just secured what we anticipated. We were anticipating 0.5%. They cut rates by 0.5%. So what actually happened today is rates actually ticked up just a tiny little bit because we don't know what's going to happen next. Now we're waiting to see, okay, how are the markets going to react to today's decision? What are these Federal Reserve members going to do once they get back to their respective locations and go in front of the press and start to uncover what their future plan is? They're going to meet 2 more times this year. And so we're trying to get a feel for, are they going to continue cutting rates, and by what percentage are they going to do? So
yeah, and let me just add something to that. Is you're thinking to yourself, consumer watching this, why would the interest rates go up? Because demand was created. By today, by the news, suddenly everybody started calling Tucker, and that kind of, it's a psychological effect. And really, what the Feds did today is they made a determination months ago that inflation had been cooling enough that it's time to start to allow businesses to start to pay less in interest. Essentially, that's kind of what it is, because it's the bank to bank interest rate. So that cost of money goes down, which means the cost of money from the banks to the businesses goes down, and business can kind of ramp up. And it's not enough. They try to do it incrementally. This was one that was probably overdue, because I saw a lot of people saying, why aren't they doing this sooner? Why aren't they doing more? Because what they're trying to do is achieve a soft landing. When we have really postponed and kicked a recession down the road, and almost seems like we have avoided a recession, and nobody really knows. But the tools that they have is really this interest rate. So it's hard to say because it's interest rate, but there are so many different interest rates that we're talking about that all kind of follow this. I do believe the long-term effect will be that mortgage rates come down, but it's probably more like 3 to 6 months.
Exactly. And the soft landing is what you kind of hit on. If we roll back the clock and watch their pattern for how they increased rates, that's going to be similar to how they decrease rates. They didn't just come out of the gate and say, hey, we're going to increase by 1.5% and just take a bunch of banks and cause mayhem. They have to incrementally make changes. And so you're exactly right. They're going to be conservative. And Jerome Powell was very careful in his remarks today, and basically saying, hey, we're not out of the woods on inflation yet. We're not out of the woods on a potential recession. He was very careful to say, we're going to continue monitoring things, and we'll see. And so to your point about the trend will be home loan rates should come down. It's really going to be, what's the stock market's reaction to this? Are businesses going to start to reinvest? Are they going to hire? Are they going to continue the pattern of layoffs and so forth? So there's a lot of digestion that needs to happen with this information, and then you could see rates come back down. So in terms of your listeners, buyers and sellers on the fence, now is a great time to get back in the market, because this is going to heat up the market. We're going to see these fence sitters. A lot of the people that called me today were people that I talked to 6 months ago or a year ago, and they said, you know what, I'm going to wait for rates to come down before I buy. They're all flooding back into the market.
Yeah. And it's not even a matter of taking advantage of the opportunity. It's out of necessity, right? So, I mean, people are making moves and they're postponing moves of necessity because they've got to do things. And, I think the opportunity we talked about the last couple of weeks, over the next couple of months for serious buyers, is out there. There's a good opportunity to grab on the home. Something else happened today. What else happened today for you?
Yeah, so really excited about this. So, and many lenders will start to do this, but we're anticipating that the FHFA, which is the organization that manages Fannie Mae, Freddie Mac, Penny Mac, these large secondary mortgage institutions, are going to raise the conventional loan limits across the country. So Guild Mortgage proactively increased our conventional loan limit. So think King, Pierce, Snohomish County, and really any county in Washington now. We can lend with a conventional mortgage up to $799,175. So nearly $800,000 you can borrow with a conventional mortgage. So if we put that into the purchase price, that means you can now buy an $841,000 home with as little as 5% down, or $823,000 with only 3% down. Dan, that's $24,000 out of pocket for a down payment, and buy a home at $823,000. It's pretty incredible and perfect for our market.
Yeah, essentially, it helps kind of balance out the affordability factor by increasing the amount you can borrow. Obviously, you've still got to qualify for the 95% that you're borrowing, and we're somewhere in the mid sixes. Is that
Yeah, I
right?
think that's fair. Yep.
Okay. So, yeah, all in all, I think here's the thing is we've obviously got 2 months of election that we got to clear. And, despite what politicians say or do, this country's resilient. It's designed so that no one central place is going to do that. But the consumer sentiment part is where we're going to see the most. And my hope is we get through this as a stronger country, and we can kind of get back to the business of a booming economy, which we can really do. So because when that economy booms is when the housing market follows, and sometimes it's the converse. Right now housing is such an issue. We've got to definitely solve the building, but that's for another podcast. So, all right, Tucker, thank you. Long story short is, if you are interested in learning more about the loan limits, what they do, what they can do, if you're considering selling your house, reach out. Before we go, let's talk about what you plan on doing this weekend.
Yeah, so kind of an interesting weekend. It's my wife's birthday this weekend, and she doesn't let me plan anything. So the calendar's wide open for her to dictate what we do at
Nice.
whatever she feels like doing on Saturday. That's what I'll be doing.
All right. Sounds good. Well, we'll hear about it next week. Thanks for coming on, Tucker. Have a wonderful day.
You too, Dan. Thank you so much.
Yeah.